Before we jump into this episode, I want to invite you to join our community to help you become a better steward, scale to billions, and ultimately give more or all of it away. All I want you to do is to click the subscribe button right now. I love your support. It's incredible to see your comments, and we're just getting started. I can't wait to go on this journey with you. Thank you so much for subscribing. It means the world to me. Welcome to the Build to Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. We believe the key to scaling and compounding your wealth in life starts every single day with the mindset and practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goal is to help you scale and compound your wealth in life so you can give more all of it away to help MVPs. My name is Brett Swartz. Each and every episode, we're joined by the world's top entrepreneurs, millionaires, or billionaires, and they share their secrets, insights, and wisdom with us so we can all level up and make a bigger impact. I'm excited about our next guest. He is out of the kind of the Gainesville, Florida area. And he's going to help us to permanently reduce our tax, or at least talk about some strategies to potentially do that today. And within 20 minutes, he can provide you with be able to identify a variety of solutions that maybe can significantly increase your profit and permanently reduce your tax. And he is going to share all this stuff with us right now. Please welcome to the show with me, Mark Myers. Mark, how are you doing?
I'm doing great, Brett. Thanks so much for having me. Appreciate it.
Absolutely. And for our listeners, get to know you for the first time, would you give us a little bit more about your story and your current focus?
Sure. Actually, I started out at the University of Florida with exercise physiology and sports management. So a lot of people ask me, how in the world did you become a tax strategist? Well, after running really high-end health clubs in New York City and Los Angeles for a number of years, I realized I understand how to run a business, but I'm never going to make the money I want to make working for someone else particularly in the fitness industry. So I left that space, became a consultant to business owners, specifically in the insurance space, which has a lot to do with tax efficiency. But I realized in the insurance space, there's a lot more to tax efficiency than just properly structured insurance. So I really don't even do insurance anymore. All we do is help people navigate the 75,000 pages of tax code to find what we call coupons, right? Because there's plenty of tax savings opportunities there. It's just that the IRS doesn't send out a flyer like Trader Joe's or whatever to tell you where your discounts are. So we really help people kind of navigate their fact pattern, look at coupons or tax incentives that they could use that are desired for them to use by the federal government. That's why they put them in place. And the net result can be, hey, you're keeping a lot more of what you work so hard to earn every year. So.
Beautiful. So let's start with that. So what is maybe the number one secret or first step to helping anyone who's listening to permanently reduce their tax?
Sure. I'll jump past the novice and intermediate because a lot of people have heard, dwelling unit rental and Augusta rule and structuring an S corp so you can reduce your employment tax, all the things that people have heard before. And let's fast forward to a little bit more outside of the box, but inside the tax code thinking. One of the things that we like to do is we like to help people donate assets. So, anybody out there that's charitable minded, they know that when they donate to a qualified 501c3 or even a private foundation, they get a deduction, right? They get an itemized deduction under Schedule A. And if their tax bracket, say in California, is 37% federal plus 13.3 state, they save 50 cents. So that's not a profitable endeavor though. When you give $1 to your favorite charitable organization and it saves you 50 cents, your net worth is still less 50 cents, right? You gave away $1 to save 50 cents. How is that profitable? It's not. So that's where we come in. We say we have lots of relationships with owners of assets, non-cash assets, that they are willing to sell them for substantially less than the current appraised value. So that becomes interesting because if you can buy, for example, a $100,000 asset for $20,000, and then you donate that $100,000 asset, and you're in a high tax bracket, right? Say California. Well, that just saved you close to $50,000 in tax. But remember how much it costs you to buy the asset, $20,000. So the question is, do you want to send $50,000 of tax to the feds and the state, or do you want to buy an asset for $20,000, donate it, and save $50,000 in tax, netting you $30,000? So that's one strategy that we use over and over again that is pretty straightforward in the books. You do have to follow the rules. You have to own it for a year or have a way that you can own it for a year without physically owning it for a year, which all has to do with partnerships. And it has to be qualified, appraised by third-party independent qualified appraiser. So those two things are really, really important to make sure your hold period is long enough or it meets the standard. You're actually donating it to a charity that will do good things with it.
So if you like this little short clip of the interview I just did, click over here to watch the full interview. And please don't forget to subscribe. Thanks so much, everybody.